All right, good afternoon, everyone. Scott Henderson, shooter. Hey, and we are going to go over some charts, try and come up with a strategy here since it sort of feels like we found a bottom, or at least a temporary bottom anyways. And of course, at the end of this presentation, please do review our disclosure. Now, the first thing I want to switch to is I want to go to marine traffic. I just want to sort of zoom in on this for a second, because this is really what we're dealing with as far as what this economy is going to do. It's either the straits clean up, right, and we start getting some major traffic. Now, ironically, we still have clusters. I mean, we're starting to see some traffic through the straits, which basically is this strait right here. And, it's roughly a 20-mile channel that freight goes one way. But you'll notice there's no new vessels coming in. So it's still a little, I'm going to say weak. So it has not waned. But we are seeing some traffic flow, and the market has responded to that in a very positive way. So, all right, let's jump to my charts, if I can figure out where the heck I put them. And let's jump to, now I've got a few extra things on the chart today because I want to start looking at projections, fib extensions, things like this in my chat. So, and I find this is, or at least I think this is a good way to express it. And you guys obviously either agree with me or not. And, hey, if you like something, share it. If you don't, tell me otherwise, But my thought here in the dollar, and what I see here is targets, some confluence up around 103 on the dollar. Now, what this tells me is that weighs on more pressure on the equities. So that means it's more of a bearish stance. However, our current candle suggests that we might come lower. So I would think that we retest this 98, gives us a little bit of a pump in the market short term, and then maybe we continue this trend back to the upside. Because clearly the trend is just in not a positive direction as far as equities are concerned. Let me jump over to TLT. No man's land, not doing anything. I actually sort of like this sell. We had the same thing with metals too. And what I mean when I like this sell is it's honoring the wedge. So, it gets down to this level, about 83, 84 bucks. We probably got a good shot at some longs back to about 92. So we'll be interested in looking at that when that obviously plays out. All right. Looking at the SPY. Now, I've really not changed much here. I wanted to give a visual on where our bands are relative to this entire cycle. So, right now, we're sort of in this gap. We get up here, which we're pretty close to, around 663 in that range, roughly where I see this too. I think we hit a little resistance. And then we're going to find out if this is the impulse down or we're done here. Now, one thing I'd like to notice is we overshot this speed line and we came down and tagged my secondary speed line. The challenging part, there's not another speed line. So if this shelf right here breaks 616, there's nothing until we come down to 562. So we got a nice $40 plus move there if it continues to the downside. But this is going to be the tell. I mean, actually, yesterday was great. This morning, I was hoping we'd get a gap. Didn't see it. However, notice the projection, a decline of 59% based on the fib extensions. And these are different tools that just measure, say, hey, this is the pattern. This is where the projected is. And, even my fib corrections are down at the 2618. So if this whole structure breaks down, that little box down there is where we're going to go. We're going to be right there. That's where the confluence is down here at this zone. And that's actually kind of challenging to look at things. And, jumping over to the NASDAQ, and then I'm going to spend a second. I'm going to go off kilter here and go to an article I just published because I sort of want to discuss the AI infrastructure. And I just have been digging in that realm. But I think the Mag 7 are going to be critical to our recovery, whether or not CapEx works or not. And I'll follow through with that in my thinking as I go through the article briefly. But the count here on the NASDAQ is not as extreme as the SPY is as far as the correction, which tends to tell us that we're going to have that same pump in our leaders that we've had before. And we're starting to see it in isolated bids. We saw a little bit in the bid for Google. We saw a little bit of a pop as far as Amazon and, Metabiz basically died. But, at this point, I think we get above this 596, the bulls take over, and we have to really break below 540 for the bears really to take over. And, once that shelf breaks, there's really not much support here. There's a couple, the 618, kind of weak, but when I look at this, it's broken through it. There was no support here. We gapped above it, took it out, but we got this exhaustion push. This kind of exhaustion exhaustion, if this rejects, is what I think we'll get here. I think it'll be a little more aggressive. All right, so let me jump over to, I thought I had it popped up, but I didn't. So we're going to just go find it. All right, I'm pulling up my AI infrastructure watch list. Now, something that everybody see my screen, by the way? Let me give me a 5x5. Yep, great, perfect. All right, so I'm looking at CapEx and where that money's going to go. And, I happen to be reviewing stuff the last 48 hours, and it happened to clearly sort of outline where the money's going. And I was really astonished when I looked at the difference between OpenAI's actual revenue and Anthropic. And apparently what has happened is that the scaler, meaning Amazon, is not only the primary reseller for Claude, they're also the primary scaler. In other words, the NVIDIA chips and the servers and everything, ultimately about 20 to 23% of the revenue that's coming in from Anthropic in some way is going back to those scalers. So that really what this article was about, is that we wanted to jump in and find out who are the major benefactors from that distribution of CapEx that is coming in from the major investments. And actually, I'm really surprised. Amazon must have a lot built out that I'm not aware of, because there are not a lot of new large data centers under construction. So they must be repurposing what they have. So in this Straits of Hormuz issue, what it basically done is I think it's kicked the can on new data center construction, because we're going to have some supply constraints. So, what basically became clear in the last couple of days for me is, hey, where is existing infrastructure that's going to profit from this, and density is going to push in that direction? Well, obviously, it led me back to the hyperscalers that are directly connected to the Mag 7. And that's where we are. So what I've broken down in this article is what I want to own, where I want to own it, and I've broken down each name. Now, today I added some positions, but I was very limited on what I actually added in the AI infrastructure that I wanted to buy it, because the charts didn't look great. So I kind of avoided them and I posted them in the network. But this breaks down pretty much each category that we want to move into from the AI infrastructure concept, but it's got a skew towards the Mag 7 and how that existing CapEx is going to flow as far as cash flow. And I just wanted to spend a second and sort of cover that. All right, now let me go back to my charts. Hopefully I switched screens the right way, and let's look at the STN core. All right, let's just go through the names and where we opened. Microsoft, what we're looking at here. Start off here. Nice sell. I mean, this is a complete reset zone. We didn't even touch the body of these candles over here, 364. It's a good spot to try a piece. So that was the primary reason we added that. Now, outside, Microsoft was the second largest position I opened besides Google today. We had opened up Crack last week. That also is a benefactor from what I just reviewed in that article. We also opened up Poet, I guess, or Pote, however you pronounce that. We're looking for back around $15. Low dollar name, but I like the way the chart looked. I like the way it bounced off of this sort of like ledge it's forming right here. And, I'm looking at worst case scenario, gets back to $7, but I'm okay with that. Dollar gain on a $5 stock is good for me. I've always liked SMCI on pullbacks, so we added a piece there. I think 50% back is totally viable. I just left my old count here so I have a visual, because quite often what happens in Elliott Wave, when you have a failure of a low, in other words, a divergent low, quite often you come in and overshoot it and then it goes. So just to give me the visual, this is an aggressive buy zone on SMCI, but I don't see how they don't benefit from that CapEx just because of the supply structure. And I do want a piece on them down here in this range, because we are looking at, $117 stock that's $23, and I think we do take out these highs. So I want a piece of that. That's just my 2 cents, whether it's a good company or not. Now, Sentinel-1, we also added this morning. Like it. This is one of Kirk's favorites. Perfect spot. Everything held right here. Unless it takes out this low right here again, then as far as I'm concerned, we're going to start building this back up into that wedge, and we take out those zones is my thought. So just mind your stop on that one. Small caps still can get hit with this, the financial constraints that are coming. Now, XLI is what we're seeing on the industrial side is we're seeing a lot of traffic, a lot of freight. We're seeing supply metrics come in like we're going to have an industrial boom. Now, you'll see me very often go against what I have as far as a visual in the chart. And here it's saying we're going to pull back as far as this number. So I just want to mind my stop. I'm not going to give it any more room than the body of the candle. Otherwise, I'm seeing this as an impulse wave up. We have wave one. We've gotten a two. We should continue on and put up a three around the 1618 unless it invalidates. Anytime you have a count, there are going to be times that you're right and times that you're wrong. You put your thesis in play. You make your bet. Just understand where your risk is and manage. Now, Google, I just like the way the chart. Nice, clean pullback, had some strong candle above that buy zone. We get back into it. And this is, I think a big benefactor from that CapEx that I just reviewed. So obviously that was the reason I add that. Then I added GLD simply because I also like the way that chart looked. Nice, aggressive pullback. 1618's back around 500. Ultimately, I think we get to about 6K, 6,500 without any kind of financial crisis going into the end of 2026. So this is sort of like my insurance. If the market really does roll back over, we should continue to see a bid. On top of that, with the Straits of Hormuz, what we had was a massive liquidation, which is what this was, by the central banks to move capital into oil and other fuels because the price jumped so much. They had to liquidate something to raise the cash to buy the stuff that they need. So, my opinion is that sort of lands a little bit and we head in the right direction. All right, we also added a piece of Link. Mostly, I liked the chart when I looked at it. Count supports a move back up to about $20. It was just sort of a good spot. I liked it overall, the crypto, when I reviewed it. So that ultimately is where I am now. Last week, we entered in on some of the fertilizer stocks. Now, let me address this whole thesis with fertilizer is that the Qatar hit knocked out big chunks of natural gas and processing in Saudi Arabia because of the amount of fertilizer, raw goods that come out of there in a process, because ultimately what they need is cheap fuel to heat it, to create it. And Qatar is going to be out at least 2 years. They're saying 3 to 5 years. So that's going to trickle down. Now, what we have in the pipeline is just like Europe is still going to receive 2 or 3 more days of diesel tankers, then they stop, right? That's going to be the same occurrence with fertilizer. And realize even in the United States, which is why I think we've seen a little bit of a pullback on the fertilizer side, we have got like another 4 or 5 days to plant certain crops. Otherwise, we miss the season. So they're projecting anywhere from a 25 to as much as a 50% reduction in crop yield because of the reduced quantity of fertilizers there. Now, I expect it to hit, but the thesis when I entered the fertilizer stock was that scarcity hits, there's no fertilizer, the price just leaped. That was sort of my thought. So at this point, I'm holding UAX, LXU, and I'm also holding a piece in Mosaic simply because I like the chart. I just like the way this looks. It's more likely to come out to the upside. Count supports all the targets back up to the upside. If it works, great. If not, I'm just going to manage my... Okay, now let's talk about elasticity for a second, because we saw a pop in Oracle simply because of the job cut. Now there's thousands of job cuts, but I added that to the elastic. And basically, what this is AI is changing the game enough where these companies are likely to have mass layoffs, more than 15 or 20,000 employees. Which boom, pops the stock. And if we look at the other names here, they're going to pop. So I like the way this stock looks. I did not add it this morning, but it is on my list simply for that reason. FDS is also another one that looks really good and actually is working well here at this point, coming off of these lows. So, I'm looking for at least back to 259. I wanted to point that out. I like the way that sort of looks. All right. So let's go back to, let me find my requests. Here we are. All right. So Amazon, this is my look. Nice spot. I didn't add it because I liked Microsoft and Google, and that was sort of my way to go in there. And I wanted to use the secondary AI vehicles that I outlined in the article versus Amazon directly. Even though they're the biggest benefactor, they also have a huge moat. So I don't know that their bottom line, because their margins are not really going to expand that much from, if they're selling a $30 or $40 or $100 subscription to Claude, they're only really seeing about $20 on that. So their main revenue streams are going to come in from AWS, which we can't directly get a piece of unless we're buying the suppliers that build that. And again, I'm going to go back. I think they're using the existing infrastructure that they have or repurposed them or brought in some new chips or whatever, because I do not see a large number of new data centers coming in here. But I do like Amazon back to the upside. I just decided not to add that. KWeb actually looks pretty good here. However, I got counts down back to around 21 bucks. We're confirming on this low, right? MACD is not crossed back to the bullish side. So right here at this minute, I don't really like it. However, if you have to own a piece of China here, KWeb's probably not a bad place to put a piece on. But I would rather do EEM, something a little broader, versus just do KWeb, just so you have a piece. If China, China's booming actually right now in many ways, except for retail has not recovered. Consumers are not spending. But that's because of the economic dynamics that are different than the United States, is that not everybody has any disposable income in China, let alone large amounts, because it's like they go to work, they get this paycheck, it never grows. There's no capitalism there where they can turn $100 into $500. They're stuck with whatever the state pays them. So you just don't have that, the economic boom that you see in other free societies in China. So if a stock is going to move, and I would say this with China, BABA moves first because that shows the consumers buying. So, all right, next request was ENPH. Don't like it here. Mainly, it isn't a bad looking structure, but it pulled my wave. We got a little bit of a wick here. It gets back above this $30 or $41, then I might try it. Here outside, I'd like a little bit of a deeper pullback where we test this low in this range, these two numbers. So maybe around 32. Reason is I just don't like these candles here. It's too aggressive to the downside. Looks, because this could morph into a impulse down. Right now, it looks like a pretty clean ABC if we look at it this way, right? The reason I say this is because you got A, B, C up in this first leg. Then you got an ABC as the corrective leg. So you got your A. We really aren't getting a B yet. So the reality is this could actually be an impulse down. So that would be my hesitation, because if we're looking at for an impulse down, we'll get something like this and it'll be back down around this level. So back around 30 bucks. So my bias would be, at about $33, then start biting just a little bit. UMAC, tough call here. Hopefully some of you used my confirming trend support up here around 19 bucks. You got out at 17.98 versus holding it 40% lower. When you have a very impulsive stock, honestly, I have not found a better way to manage it than using that confirming trend support. I use all kinds of stuff and test it, but my margins are higher at the end of the day by using them. So we got a nice wick. The problem that I have here is we really don't have any support that is held. You got this really noisy zone, right? You have this buy zone way the heck down here, right? Then we got one more buy zone a little further up. Let me just take it up to that one. So you got this little zone right here, and that really is where you are. So it's going to come back 840 from where we are is probably a good spot. You could take it a shot here at 1345 for continuation. But the challenging part is this is an impulse down. This is an impulse flat. And that structurally to me says this could be an ABC here. So, when I look at it this way, this is A, you got an elongated B, right? And C is probably going to come in and be something more like this. So it has the risk, especially with this look, because this is more aggressive than here. Even though this is aggressive, you had a WAN right here and we got a bounce. We've got no bounce here. And right now you're getting sort of the inside bar there kind of thing. So yeah, it does indicate there might be a bottom there, but we have no conviction on RSI, at least looking at the weekly. Let me come down to the daily. We got a nice bounce there. However, we're already rejecting. We're confirming on this low. No divergence here. Didn't put in a new lower low. I'd like it just a little lower. I like it at this band, 852. AMTX. Now, I think I discussed this, I don't remember, when I talked about this wick. There is an MO on this stock, and the most likely place it goes is back to 221. You confirmed on the third drive. So you got drive 1, right? Drive 2, drive 3. Boom. Clear as day. It's basic what I mentor and teach as far as the look of a chart and what it does or what it could do. Now, what's even more challenging is the full count, the full breakdown here. It says this, we're going to go down, it's going to take out $1.50 here. So I would not be building a position until we take out that 354 here. That's my 2 cents. I would be trimming and taking profits and looking for something else to jump in. That's just my 2 cents. All right, looking at AST Space Mode, really serious rejection here. Nice wick off of this low. So we have, when I had this clean buy zone highlighted, it probably tests this right here. So we probably do get a push back to about 125, but it probably rejects there. I did not add it. I looked at it like 2 or 3 times over the last couple of days. It's just whenever you have this flat, which is kind of a bear flag, it's a 50-50 shot which direction it's going to go. You got this wick, 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 wick. What's it telling? We're getting some buyer resistance. I mean, they're not buying above it. They're saying, okay, this is the bear market. On top of that, we have this wick that's back over here at roughly 86 bucks that occurred back in October. I would rather it overshoot this low at 49, come back to this reset zone at 47. It's a better shot long for me. That's just my 2 cents. All right, looking at Rocket Labs, good spot actually. Doesn't have an extreme target. This is likely a flat that builds out up here. Really doesn't give, I don't get any conviction until we're back above 78. So there's, it's challenging in that I see liquidity and capital restraints ahead of us. So it really depends on their conversion to the bottom line based on what their lending infrastructure or their lending facilities are out there. And I'm not aware of that with Rocket Labs. I haven't jumped that far into it. And the main reason is because I got my 3 peaking drive. Peaking drive 1, peaking drive 2, peaking drive 3. So it's not really heavy on my radar until we come back and test this low. So at 40 bucks is where I think I have, or 41, I have an alert on it. Then obviously we'll take a look at that. Let's take a look at ALAB. Actually looks pretty decent here. The only thing I don't like here is the candles are red. I pretty much in this market, I want a green candle on at least a daily before I'm going to jump in. Otherwise, I want to back test to 50% of the prior candle to even give it a shot. But in this case, I would say unless we push below this body or close to this body, that would be where I would say, hey, this is invalidated to the long side. I mean, it does look pretty good. I looked at it, 3 or 4 times this morning because it hit my radar. So, and let me come back and I want to go and where are my, there. All right. So let's talk about energy. I'm just going to jump off that. If anybody wants any other charts they want me to pull up, just post it and I'll get to that. All right. Some names I like here. TLN. We're getting it. We got a gap. We got some follow through. It's going to at least head back to this 374. So if you're interested in adding to the AI infrastructure play, energy is one that's going to be required. Then look at CEG. Similar look, gap, second handle. I think we get up and close this gap to at least 294. I think it's pretty much given, but nice wedge, clean structure. Ending diagonal as far as the chart count's concerned right here on a corrective leg, which is very bullish to me. So this is boom, where it's to me, it's going to find a bottom here soon, no matter how you slice the bread. And it's likely going to come back. And let me just throw some fibs up here on this last corrective leg so you guys can get a visual. And then, 50% back on this is going to be back up about 319. So this is a good risk reward. All right, Micron just popped out of this hole. I mean, just popped. I just don't, again, peaking drive 2, peaking drive 1, peaking drive 2, peaking drive 3. It's chaseable here, but the most likely thing is it rejects and gives us another higher low. I'd rather take it off of that higher low, but I like the look here. It's a name that's going to do well with the AI infrastructure. ASML also looks decent here. Nice descending wedge. Targets up around 1600. I like the look. ANET, similar. Got 2 green candles and a gap here as well. None of it measures to the upside as far as any of the counts that I see here. But again, I'm looking at this as this is a leading diagonal on the downside, which is not as bullish as an ending diagonal. But, we pretty much have the completion of an impulse. As long as we don't take out the body of this candle right here at roughly that 116, it's pretty much like a 70% likelihood we go back up and test this 139 level first. I mean, that's just a conviction level. Now, let me go to Credo, another name I like here. Similar look. Boom. Gap candle, looking up, back up to the upside. Similar number here. Let me throw some fibs on that as far as the look. I'm just going to measure this last leg so we get a good quick visual. So 50% backs back up to about 102, 103. NBIS. The only thing I don't like about this one is that red candle. So we get back to about 50%, but I do like the look here with this drawdown as far as the name, just what it's into and where I think it's going. So it breaks below this 100. Then I would say we're probably heading for one more overshoot down around here, around this 85. So it's kind of a wait and see, but I like it. All right, let's look at Fortnite. Outside of this candle, I love a back test. I'm going to come back and say it invalidated here, overshot. I'd like a pullback maybe to about $80. Give it a shot there. Palo Alto Networks, similar look, pullback. Note these are all names that I flagged before we had this, I don't know what we want to call Iran. I don't really think it's a war, but it's kind of an invasion. But, when we get back to about 157, I'd like to take a shot with that long. All right, look at AI power. The main thesis with the current crypto miners is that they get converted to AI infrastructure because it's more profitable. And they already have the power source running to them. So Mara is a primary benefactor. I would have entered it this morning if we had a green candle, but did not occur, so we did not enter it. Now, ironically, I highlighted biofuels, I think it was last week or the week before. Everything's rolled over with the noise that's coming out of hey, the Strait of Hormuz is open. So they just dough. That makes it challenging for me to add any positions or even look at the whole sector. I would be trimming in that sector because if it's going to be that emotional, what's going to happen when the strait's completely open and how much more are these names just going to dump? And what it tells me is that quite a few of the market makers and the bigger dealers have been there. They're playing with those numbers that's bigger than us. And when you see that in the sector, you just want to kind of avoid that. So let's take a look at AIRO. Nice spot. Nice. It's actually a good spot. Yeah, good spot to enter. Very good spot. As long as it doesn't, I even moved the invalidation line up there. I marked it before. I'll give it to this candle. Below 748. Changed my mind, but that looks really good. I'm just flagging it for an ad. All right, let's look at NEU, or NUE, excuse me, where that Dixlexia just kicked right in. Beautiful look, fibs to the upside. The only thing I don't like is that count telling us it's not done, but that's a pretty aggressive push. I don't think that. So 50% backs, maybe 187. Wave one looks like it's completed, at least on this leg. Kind of tight, not really symmetrical. Wave three will probably come in here. Then we reject, should come back and test this 172. So you got a decent shot back to roughly 187. And then let's take a look at, I'll do GLD again. I thought I already did that one, but we'll do it again. Now, the main reason I added GLD was because of the Straits of Hormuz, and I briefly discussed that. MACD cross, right? We have confirming on our low. So this was confirming. We have a divergence, and it happened to be at the shelf. So what do I have there? I'm going to do like a Fred Flintstone bounce. They're going to come back and buy gold, I can tell you. Just with that kind of pullback, and the only reason we got that aggressive sell is the dynamics have not changed with the central bank. They just ran out of freaking money because oil, gas, and diesel went so high, their coffers weren't big enough to pick it up, and they had to raise cash. So they're no different than a trader when they don't have necessarily the funding mechanisms like the US dollar has. So a lot of those third world, like Sri Lanka, are desperate. I bet you their coffers are almost empty from what they've had to buy. So PPLT looks good. I like platinum. I've always liked platinum. I'd like it better at 148. I'm just seeing where I would want it. I wouldn't give it more room than 174. You could, because it's done nothing wrong here. It's just starting. We haven't even got one. Wave one's not even done, and I'm just going to do this and see how good I am. Let's see how good my eye is here. All right. So, and I'm just going to measure this first. I'm not going to measure the rest just for shoots and giggles. How perfect is that, right? The 50% back. All right, folks. Well, any other questions? Any other charts? No? All right. Well, with that, perfect, guys, gals. I appreciate you. Until next time.